Welcome, everybody. Barry, why don't you go ahead and introduce yourself, who you are, and I'll actually lead into the next slide.
I was first exposed to life settlements back in 2016, and basically have dedicated myself to them since then. There's a lot of advantages we can go into that are present in life settlements that are really not available in other type private equity situations and other alternative investments. What is a life settlement? More and more people are starting to understand what a life settlement is, but they don't know they're available to everyday investors, right? Even life insurance carriers are now required to say on life insurance policies that you can sell this as a life settlement. You don't have to surrender it and forfeit it and get nothing. You can sell it to a third party life settlement company. So that's called brokering life settlements. But what we're talking about today is making those life settlements available to accredited investors, right? Like IRA club investors, right? But this is life settlements for accredited investors. Of course, just like Ramez had a little disclaimer, we have to say this presentation is no substitute for actually reading the documents, okay? But that said, we're going to educate you today. I want you to understand what this product is all about, okay? People are looking for alternatives now really more than ever. Big reason is the stock market has been just, not like it was from, let's say, 2010 to 2020, right? There was a whole period there where you almost couldn't pick a losing stock. But nowadays, I believe last I checked, we're still down from the price in the S&P 500 a full 2 years ago. So maybe the set it and forget it in the stock market strategy is kind of being questioned now more than ever, right? Same thing can be said, real estate, everyone has their own opinion, but if a crash of the 2008 type comes around again, the whole point, the beauty of life settlements, our whole pitch, why you would want to invest in life settlements is because, any of these economic situations, these market forces actually do not affect life settlements, right? Because your payouts are coming from highly rated life insurance carriers. As soon as that insured passes away, we're processing that death benefit claim and paying you out. Guess what? No matter what happens in the world, as far as these geopolitics and stuff, people are still going to die. And to my knowledge, it's unprecedented for a life insurance carrier to not pay out a death benefit claim, excluding, of course, fraudulent claims. Okay. And that's going back through the Great Depression, et cetera, et cetera. Okay. Right. Not only is this legal, back in 1911, the United States Supreme Court ruled in a landmark case for the industry, Grigsby versus Russell, that life settlements or life insurance policies can be bought and sold like any other asset. Okay, as soon as a life insurance policy is sold, it's now a life settlement in the owner's hands. Okay, so it's the same insured and it's a new owner. Okay, Warren Buffett, everyone's favorite investor, I think. He's actually still alive and giving conferences, by the way. God bless him. I saw him recently online in his 90s and still just sharp as a tack. He purchased some years ago a life settlements company in whole for about $1 billion. Bank of America, Chase Bank, pretty much all the big banks that you're probably familiar with do own life settlements. So they've been around, and now kind of the secret sauce that Equity Life brings to the table that we'll get into on another couple of slides is that we make life settlements available to everyday investors. Now, kind of explain how that works. You don't have to be like Warren Buffett and buy a whole life settlements company. You don't have to even buy whole policies and try to figure out how to select the policies and service those policies and keep them in force, et cetera. We're just a turnkey program. You can buy in small minimum investment. Now you have an exposure to a whole little portfolio of life settlements, and you're getting paid out every time one of those insureds passes away. Okay. So, just again, lending credibility, London School of Business study, 11-year period, 12.9% APR being earned by institutional investors. Okay. And in this presentation, we will get into exactly what our offering is today and go through just a sample investment assumption as if you were investing. We'll call it 100,000 just to keep the numbers simple. Okay. And we'll get into minimum investment amount and all that. But just to be clear, I know I'm circling over all these concepts. I think we learn by familiarity. I'm going to tell you what the thing is. I'm going to allude to it. I'm going to talk about it from a different angle. Eventually, it'll start to sink in. Okay, so at its root, a life settlement is when a life insurance policy, usually on a senior, okay, like 65 plus, is purchased for cash. So that senior is cashed out. We now own the life settlement, and now we can reassign you a piece of that life settlement. Okay. We already talked again about how solvent insurance carriers are. Banks, of course, fail by the hundreds during recessions even, but guess what? Life insurance carriers almost never fail historically. In fact, during 2008, I believe over 100 banks failed, but not a single life insurance carrier failed. And there's always someone who is kind of following. They say, oh, what about AIG? Guess what? AIG's investment division failed, but their life insurance division did not fail. So, okay, in a slide or two, we'll talk about exactly what our offering is, but I'm just kind of priming you again to see that we own a portfolio of life settlements at any given time. And for one small investment or large investment, okay, you can purchase a piece of each of those policies, right? We call it a portfolio type structure. There's a number of benefits to the portfolio structure. But firstly, we have been offering these for some years. These are the three recent payouts we've had. You can see really fantastic rates of return. You're going to say, Barry, this is too good to be true. I can't believe it. And I'll tell you right now, yes, paying out, over $1.5 million with a weighted average APR of 50% is too good to be true. I'll tell you right now. And that's why, life settlements can perform spectacularly, and they can perform subpar, let's say, okay? And it depends on when the insured passes away, right? Because you're going to see in slide or two, the estimated returns are quite good. You're going to say, hey, Barry, wow, estimated return is quite good. There's no stock market risk. There's no real estate market risk. These are going to pay me out even when those markets suffer. But when am I getting paid, right? And the answer, of course, is when that insured passes away. So these three payouts right here are the results of the insured passing away much sooner than expected, and the investor realizing their return much sooner than expected. So you can see this $1.3 million check was the life expectancy on the insured was 74 months. This was paid out in 18 months. Okay, so investors realized a 74% return in 18 months on average for a realized APR of 46% on a big case. So in that case, the investors had 5 policies. This was one of the 5. On this payout, they already got back 65% of their principal after just about 18 months, right? How awesome is that? Are our portfolios always going to perform like this? No, the answer is no. Not all policies will perform like this, but some will, some have, and some policies will be will be less than the estimates, and just that's the nature of the beast, and that's part of why we have the whole portfolio structure that you're now looking at. Okay, we now have in Equity Life 7. It's our 7th offering over here. We have 6 policies. So for one investment, and I'm using $100,000 investment assumption, you're purchasing about $179,000 death benefit. Okay, so you will realize $179,000 death benefit across these 6 policies. So you can see in the second to last column and the last column, of your 100,000, how that breaks down on a per policy basis, both your investment amount and your death benefit ownership amount. Okay. So again, is that a good rate of return? It depends when the policies mature, right? These policies mature very soon. You're going to make a killing. And if they all live to 100, you're going to say, Barry, this sucks, right? This is the worst investment I ever made. Fine, that's fair. But you know what? If you own 6 policies, what's more likely to happen? It kind of reverts to the mean, right? It comes back to the average, right? So this is a pretty typical portfolio for us. And this is available right now, by the way. We've actually sold out about half of this $5 million face amount already. You can see insureds are in their 70s and 80s. The youngest being, of course, this 70-year-old male. We have the oldest being this 86-year-old female, and several policies in between. Now you can see this life expectancy in months. So this is your idea about when these policies will mature. These insureds want to sell their policy. We're like an angel to these insureds. Why? Because if you have $1 million policy, you're Miss 80-year-old female with the $1 million policy. Guess what? You don't want the $1 million policy. You want cash. And if you want cash, the best way to get the most cash is by selling it to a life settlements company like us. And that's only possible if investors come in and then buy these policies. So if you weren't here to be buying these policies from us, she never would have got cashed out. She'd be stuck with the policy. She doesn't want the death benefit. She wants some cash she can spend while she's alive. And that's, again, she's getting more cash through a situation like this than she could have got anywhere else. As more awareness is brought into life settlement industry, these seniors are getting paid more cash for their policies, right? And that goes back to how now life insurance carriers are required to disclose this as an option. As there's more companies like us bidding on the policies, it's like an auction. So if there's more players bidding, they're actually getting more money. And whereas before maybe the life insurance carrier would buy it back for 10%, and now they might be getting 20 or 25%. So I want to talk in a moment about some little promos for IRA Club investors, because I know we came on last time, hey, what can we do special for IRA Club investors? And, Ramez, we've been working together since 2018, IRA Club and us, and we always appreciate the relationship. But firstly, just some fast facts here. You probably already read these bullet points as I've been talking, but we do accept cash investments. We also accept, obviously, we're doing a webinar with IRA Club, IRA investments. Not only that, but I love IRA money for life settlement specifically, and I'll tell you why. Okay, firstly, the minimum investment, $25,000. Okay, but I love it because if you have tax deferred funds, right, qualified funds, i.e., retirement of funds, you have not paid taxes on those funds, right? So let's say you contribute to your account, right? And you're going to get paid out, right? Those funds, and now you pay taxes on the gains, right? Great, that's fine. Everyone likes paying taxes on gains. You can pay taxes on gains with cash funds, but the difference is if you lose money on cash funds, you can write off the losses, correct? With IRA money, you cannot write off the losses, right? And so for that reason, investing into something which is unlikely to ever lose you principal, like life settlements, makes sense, right? Especially for Roth funds. Think about Roth funds. You've already paid taxes on the greater amount. Okay. And now if you were to receive back less than the amount you already paid taxes on, it's like, wow, that doubly sucks. And so for that reason, I love Roth money with life settlements, again, because your principal has minimal downside risk. Can I say you definitely won't lose money? No, because again, all these insureds could live to 100, and because of capital calls, etc., you can lose money, but you can also be like those investors getting paid out much earlier than expected, and you make a lot more money than the estimates. Okay, so we can go into all those details in a later conversation, but in summary, about 2/3 of our investors are retirement account investors. Life settlements, a little bit longer time horizon. You saw those life expectancies earlier. They're typically about 4.5 to 8 years. At least that's the case on this portfolio. And so retirement account, also a little bit longer time horizon. They just kind of match, right? Like peanut butter and jelly. So we do have a maximum investment amount. This is pretty standard in these types of offerings. We can take more on a discretionary basis, but let's say you've got $1 million net worth. We're typically looking at maybe let's say $200,000 of investment. Okay. Everything is by DocuSign. We actually, IRA Club has been getting better and better about handling paperwork through their own website. And, members on the IRA Club team will say, hey, Barry, should we send over the form to the investor? And we say, no, I'd like to take care of it ourselves. Our team will like to send everything by DocuSign. We keep everything just in one place, so you can manage everything just in one DocuSign. We've got IRA Club investors on this webinar. I'm not going to say how many, but it's a lot. I would do a webinar like this every day if I could. And guess what? I can put more of our margin into the product instead of going out there and getting investors when they're coming to me on an IRA Club webinar. And that is how I can offer a special deal for anyone on this webinar. I call it a 5% bonus. Okay. So you get more death benefit for your same investment amount. And just mention that you were on the webinar and we'll honor that. I can send you illustration to show that for any investment amount, minimum investment 25K on up to however much you want to do, basically. And so instead of 100,000 purchasing 179,000 death benefit, for you, 100,000 will purchase 184,000 death benefit. So who doesn't love that? And then secondly, I love to keep it simple for IRA Club investors. Probably if you're on here, you may already have an account, in which case, guess what? We'll just pay for your existing fees for a year. If you have to set up an account with IRA Club, you don't have one yet, we're happy to put our credit card on for the first year and pay any and all of your fees for 1 year, just to streamline that process. We do not charge like management fees every year. So what you see with your death benefit ownership, that is your death benefit ownership. It will be spelled out in the documents to the penny how much death benefit you have to realize on that policy and how much reserve funds are allocated to you for your investment. That'll be all in the signing documents.
I hope everybody learned something new today about life settlements. Thank you.
Absolutely.
Bye-bye.
Totally agree. God bless everyone.
The information contained herein is intended to help the viewer successfully navigate common IRS and Department of Labor requirements to help achieve successful results from their IRA. The information is not intended to replace information from your legal counsel or income tax professional. IRA Club does not offer or sell any investment. All investments have risk.